Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 1st of July. All right, now, first of a new month. Always exciting to get a new fresh round of data. But just have a look at the spread of the news here. There's a fair bit to sort of take in. And I'll show you the currencies in a second. The dollar yen is shot to the top side, bit of a gap. But obviously the Chinese news, you've got Trump, Xi set for high stakes trade war talks in Japan. Well, that's come out like they're going to actually come together and start doing some good things. The Donald taking advantage of every publicity thing he can do. He's had a crack into the demilitarized zone in North Korea. Said a little bit of a hello there to Kim Jong and said they'll start talking about the nuclear talks are back on the table, I should say. So basically out of this, the whole situation, the China warns of long road ahead for deal with US after ice-breaking talks. So they've still got a fair bit to do. So, but the positive is US, China seem to be coming back to the table with specific details of getting a trade agreement going. Trump heading over to see Kim Jong also diffuses that side of things. Now, last week, this time last week, it was the US-Iran conflict. Now it's all sort of good news. So what that does for us, it does a few things, but if I just come over to the MyFX Trading Hub, you'll see the general spread here of the analysis is starting to become a bit more like a dog's breakfast than anything else. Now, the US dollar, with all the various things going on, the daily trend line, yeah, it's broken down, but the hourlies and the weeklies is just trading sideways now. Dollar CAD's still the favoured pair as far as overall consistency across all analysis. Fundamental or central bank and the charts. The dollar Swiss, with that safe haven sort of trade sort of blowing out a bit, it is trading or starting to trade sideways on the dailies, but still it's come so far. It's still in that downtrend at this point. And then you've got the rest of the currencies, which are on the dailies, they're sort of broken levels, but on the hourlies, they're just trading sideways. The Aussie and Kiwi, you would think, would be the two big pairs that would benefit from the US-China sort of positive vibe going on there. At this stage, they are not really reacting at this point. Now, if I just give you a quick look at this is another good reason. I mean, traders are always asking me, why can't I hold positions over the weekend? Well, this is a very good reason. You got a sort of pretty much a 500-point gap here in dollar yuan. And this is just off the announcements, right? So it may even be bigger on some brokerage platforms, but that's what you get out of a positive outcome of a geopolitical event. It's rather a little bit chaotic. Now, if I bring you over to the major charts, okay, you can see here where, let me just get that pen back up, the dollar yen, right? So the initial gap sort of from 108 up to, looked like just about 20, but it's up in the 40s now. This has got a lot more room to go. I think the US-Iran situation, the Iran simmering in the background, probably will stop it going from a huge distance. But this is a complete defusing of, a lot of that, geopolitical risk out there. But look at the Aussie and Kiwi now. They are just slowly tiptoeing towards the top side. Now, with that 500-point move in dollar yuan, it looks like the market doesn't really believe it at this point. Otherwise, I would have thought the Aussie would be a lot higher, okay, another 50, 60 points, and same with the Kiwi because they are the two pairs that benefit. You can see here the euro and sterling both just trading sideways like nothing has happened at all. And you've still got dollar CAD here grinding to the downside. And we're starting to see some wild moves here on oil. So we've got to keep an eye on this very closely. Oil seems to be the driver here. It's at $59, but it did drop back to 57.5 Friday. So it's back up to 59. So that's going to be interesting to see how that plays out as well. Right. So, so just having a look here, just to give you a bit more detailed look, especially the Aussie, right? So with the current move, like you're following the geopolitical situation, we've got the Aussie here sort of cruising to the top side, and we've got a major level here at 70.50 on the weekly charts. So it's been in that downtrend for some time. You've already got the initial break here on the dailies, and we've got that last daily trend line to break at 70.50, which also corresponds with that weekly chart. Now, a few traders were already asking me, like, why isn't the Aussie higher? Well, this comes back down to understanding the the complexities of technical analysis versus fundamentals. Fundamentally, the Aussie is going down, right? The central bank's going to be probably potentially cutting rates tomorrow. You've got a very weak economy. What we are seeing, the Aussie's bouncing because of geopolitical events and just slightly weaker US dollar. So don't fall in love with this trend. Well, I was going to say, like, if it breaks 70.5, there's a chance for it to run 100 points easy, okay? But the fact is, we are lacking the key component, which is the fundamental aspect of the market. So when you come back to look at the, if I just switch it back over to the MyFX Trading Hub, you're trying to sort of piece this together and work out, well, when's this thing going to go? Especially the Aussie, right? It's primed, as is the Kiwi. But you know what? The central bank focus for these two pairs at the moment is neutral. Okay, that's because we've got a downward bias on the Fed. We've got a downward bias on the RBNZ and the RBA. So they neutralize each other. So it can pretty much go sideways. But now we've got a situation where this thing's sort of racing to the top side. But you know what? No one is buying. No one's buying dollars. We had some manufacturing numbers out over the weekend. If I just bring you back to the data, over the weekend out of China. Now, they were just a fraction off. That's probably, you know, as I said, the market is still trying to factor in this, the China-US news out of the weekend. So they're trying to factor that in. At the same time, there's a slightly bit of weak data. What we're looking for today is we've got the secondary manufacturing number, which is just excuse my pronunciation, the Caxin manufacturing number. This is sort of the second number. So we're going to see how this number comes out. Now, if this is strong, it goes with the current move in $1, which is down, which is yuan appreciating. That may give the Aussie and Kiwi a boost. Now, if this data is weak, well, I don't know if Aussie and Kiwi are going to move that much, but it's against the overall move here from the news in the weekend, so that it really will diffuse things. So what you're going to do is on Mondays after massive events, like this is like a G20 from years ago where they used to have big announcements and you'd see major fluctuations in the currencies. We're just waiting for this to factor in. Now, obviously, China's the main thing to keep an eye on. So we've got some, good to see, we've got some, as I said, some Chinese data to look at. Aussie, Kiwi and dollar yuan will be the key instruments impacted by that release. And then you come through, really, let the market open up, settle down over Monday, and then you come into Tuesday, and that's where we start to look at the RBA. And then there's a whole, well, there's not a whole bunch of stuff, but we've got the non-farm payrolls come Friday and the Canadian data there as well. These are the high impacting events that you need to be flat for. The rest of them, there's quite a few out this week that you can quite comfortably trade through. All right. Now, the core market drivers, well, this is as busy as it usually gets. You get the flow-on effect from the G20, that US-Iran situation just put to bed at the moment, but just sitting there. But the China-US trade agreement situation, now we've seen Trump go from positive to negative in a heartbeat. So that's why I think the markets aren't moving particularly a lot. I know that China is, but the rest of them, and obviously Brexit, they're sort of simmering away there as well. So we'll just have to wait and see how things play out. The market conditions, I'll have to get that updated. Pretty much, we're starting to look at normal market conditions. I mean, obviously there's a bit of gapping on dollar yen and dollar yuan, but the things are looking pretty normal. So it's not a bad way to open up the Monday trading. All right. The only situation we have is obviously dollar yen throwing itself to the top side. This is a square up of all those short positions, nothing else. I don't think they're getting long. And the rest of the currencies are sort of sitting there wondering what's going on. Don't forget, I mean, you're looking for this sort of setup, dollar CAD. Now, with dollar CAD, it is diffusing somewhat. So does this trend continue? Well, I don't know. It's a bit of a tough one to call because you've got the, you've got this thing. I see how it's just sort of trading sideways here at the moment. This tells me we've got that trend line in place. This is from Friday, and I've just let it sort of go through that. Now it's sort of just starting to drift sideways in a bit more volatile range. What that tells me is the momentum is fading. Okay, and this is after some a little bit stronger Canadian data on Friday as well. So you're thinking, well, I don't know what's going on here. To me, watch oil, right? If oil drops or rallies, that's where the next move in dollar CAD's going to be. And at this point, all I can really do is adjust it to those highs from Friday. And we're looking at this sort of key level here around 130.95, which is right, 10 points away for some potential activity. All right, guys, that's it from me. It's, as I said, a very interesting start to the week. To me, I never jump in first thing thinking, oh, this is great, let's get things moving. It's best to wait and see what happens. At least wait until the Tokyo session opens up before you start to launch in. These initial moves can be a little bit. I'll just bring you back to the MyFX Trading Hub. These initial moves can be somewhat like distracting and incorrect. So at the moment, the New Zealand and Australia markets are open. We aren't quite into Tokyo yet. I'd probably be waiting for that to have a look. And with that too, we've got the Tankan numbers. Like you go back into the early 90s or for quite some time, this was the biggest number out of Japan. Big manufacturing numbers. It used to be epic. Now it's sort of drifted by the wayside. After the G20 and everything else, will it come into play? Well, I don't know, but I tell you what, dollar yen is flying to the top side. So I'll be looking for sort of some strong numbers to get on the back of that. Now, that may not make a lot of sense to a lot of people, but if you don't know how to trade dollar yen, you probably want to look at a little bit deeper because that's the way it works. All right, guys, have a good trade week. Plenty to go off, but just be aware this gap in dollar yuan is going to have a few ramifications. It is continuing at this point. If it starts to go down through 6.81 or 6.80, you've got to think Aussie and Kiwi will start to rally. Okay, and as I said, that Chinese CAC manufacturing numbers today, probably the key component to seeing where this thing goes. All right, guys, have a good trade day. We'll catch you later on. Cheerio.